Welcome to Trading with AD. Today's video is not about trading but a bit of history on economics and our financial systems. We will go through how countries used to trade before the Brettonwood Agreement, what was the Brettonwood Agreement, why it was abolished, moving away from gold standard to the dollar standard in 1971, and what potentially could change and remove dollar as the reserve currency of the world, and what new asset can replace it. So, before the Bretton Woods Agreement, every world's currency was backed by dollar. There was a direct convertibility between a currency against gold. I'll just explain you with an example. For example, if a country has got $10 in an economy, and that convertibility represented $10 equals to 1 kilogram of gold, for example. And suddenly, because of spending needs, or they wanted to spend more into the economy, central banks, or that time the government, decided to print $20. Now these $20 still would represent 1 kilogram of gold, because the gold supply didn't increase. Let's assume the gold supply is constant. In a matter of seconds, the dollar value is half. Now, with $10, you can only buy half a kg of gold. That's why countries back then were so scared of printing money. If they printed more money, the whole country would collapse because nobody would trust their currencies. That's how the countries worked before the Bretton Woods Agreement. So the way trade used to work was, for example, if China wanted to buy oil from UK, they would have to give gold as a payment to UK, either in the form of gold treasury bills or physically transfer gold to UK in return for oil. And for example, if China did not have enough gold, either they can export something. For example, if China had surplus rice, they can export the rice to US and take gold as a return of payment. And then they can give gold to UK in return of oil. Or they could borrow gold. And imagine if gold was means of payment, you can borrow with any country. You would not be relying on IMF or United States or World Bank. You could borrow from any country, or you can buy from the local citizens. Imagine country, if local citizen had too much gold, country could pay them in cash and get gold from them for the imports. Or they can mine the gold as well. So that's how trade used to happen before the Bretton Woods Agreement. But there is an issue in such form of payment in gold. One, gold can be stolen. Theft. It's very difficult to physically move the gold. You have to physically pay the gold, and gold can be destroyed. So these were three problems in gold payment, but still countries were doing trade like this. While countries were operating like this, there was a very significant event that was happening in the world. World War II. And out of World War II came a country that was the sole superpower, the United States. And just to give you history on the convertibility of gold after World War II, $35 would buy you one ounce of gold. That was the convertibility of dollar against the gold just after World War II. So when US became the sole superpower, countries came together in UK, and Mr. Bretton Woods suggested a system claiming that it will favor and will make trade easy. They said, instead of keeping gold and physically transferring gold, why don't you just keep dollars instead? Because it's easy to keep, it's easy to transfer, it's easy to pay, and we also know $35 equals to 1 ounce. That was a convertibility. So the world knows that the US is backed by gold, and then you can trade amongst each other. So how would trade look after Bretton Woods Agreement? Take the same example. If UK had oil and China wanted to buy oil, they have to pay dollars to UK now in exchange for oil. And for example, if China did not have dollars, what will they do? IMF was created out of the Brettonwood System. World Bank again was created out of the Brettonwood System. So imagine China, instead of could buy gold from any other country, they were forced to buy dollars, or not buy, borrow dollars from IMF and World Bank to get more oil. Or China, if China had, let's say, extra rice, they can export rice to Russia in exchange of dollar, and then they could pay the dollars to the UK for the oil payment. That's how the word dollar reserve came. Means how much dollars you have got so that you can import. So while countries were trading like this in the 50s, US started printing more and more dollars to fund the Vietnam War and for the local spending. Now, I'll take you to the IMF website. I'm quoting directly from the IMF website. A sizable increase in domestic spending, local spending, and a rise in military spending, war and local printing of the dollars gradually worsened the overvaluation of the dollar. So that's why countries then started demanding their gold against this convertibility. And they thought that now this convertibility doesn't hold, US needs to give their gold back. And after they started demanding, started by France and then by UK, President Nixon gave this speech.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Suspend the convertibility of dollars to gold in the best interest of United States. That's a speech. So what does it mean? It simply means that dollar is no longer backed by gold. Overnight, dollar was debased from gold. There is no backing. So what does it mean in terms of convertibility? I'll just give you again an example. For example, 5 people having a cumulative wealth of $10, let's say everybody has got the same amount of dollars, want to buy 5 kgs of gold, which means 1 kilogram of gold equals to $2 if everybody gets equal share in buying gold. Now suddenly the demand of the gold increases. Now 10 people want gold, and let's assume, to make it simple, everybody has got equal amount of wealth. Now $20 is chasing 5 kilograms of gold. Suddenly the value of gold has increased. Now with 1 kilogram of gold, 1 kilogram of gold will cost you $4. But this is called nominal growth. This is genuine increase in the demand for gold. Now I'll explain you what abolishment of Brettonwood System did, using the same example. Same 5 people having a cumulative wealth of $10 are chasing 5 kg of gold. Imagine the number of people are the same, but they have got more dollars suddenly. Who are these people who suddenly from $10 have increased their wealth to $20? These are bankers, hedge fund managers, and ultra rich people who have simple access to banks. What do? They just borrow more and more money. How do banks make money? They just print it out. And where do banks get money from? Central bank. Now the same 5 people with $20 funded by banks are chasing 5 kg of gold. Now suddenly the same gold is now increased to $4 per kg. But this is not called nominal growth. This is called inflation. This is not demand of the gold increase. This is not the demand of the gold increases. The people are still 5. It's just because these rich people, influential people have got access to extra liquidity provided by the market. That's what happened after 2008. We asked the reason why the stock markets, property prices are increasing so high. Because these people are printing and printing more money. More money is chasing a finite resources, and that's what driving the price up. Now I'll show you a chart where you'll see how much US has printed in recent times. So you can see things were pretty stable. The money supply was relatively stable. Suddenly 2008 happened. The first financial crisis. Look what happened. And then with Corona, this has gone parabolic. Now people believe this will not have any effect on the economy. No one knows what lies ahead. The next 2 to 3 years are very interesting. Imagine this increase of money supply. What effect will it have on the commodity prices? What effect will it have on these people buying gold? So meanwhile, we're going into a complete shift in the way economy works. One country is now risen that's challenging US right into its eyes. That's China. And it will be time before China economy takes over US. And China with their CDBC, the central bank digital currency, the Chinese digital yuan, they will push their currency to be the world reserve. But we have got problems. US won't accept that, UK won't accept that. And while this is happening in 2008, that was the birth of Bitcoin, where one Bitcoin was less than $1. One BTC was less than $1 in 2008. And now it has surpassed the silver market cap. And in next 10 years, it will surpass the gold market cap. And I made this picture presentation with before El Salvador. Let's assume one country, let's assume El Salvador, has put Bitcoin now in their treasuries. So they're saying instead of now we giving you dollars, we'll keep Bitcoin in our treasury, which we know has market cap of almost gold in next 10 years. And we will pay you in gold, in Bitcoin. Next countries, as we know in the news, might be many South American countries. Venezuela has got lots of issues with US. Now, if these two countries start trading in Bitcoin, El Salvador wants oil from Venezuela, they will pay in Bitcoin. And if El Salvador does not have Bitcoin, what they can do? They can borrow from any citizens in the world. They can buy, again, from any citizen in the world, or they can also mine Bitcoin. And when world sees that, when US sees that no way they can control US dollars now, it cannot be the world reserve currency, people are resistant against it, they will also probably move toward the new standard, which is, I hope the ultimate resting point of Bitcoin is the Bitcoin standard. From gold standard to the dollar standard to the Bitcoin standard. And that is the end game of Bitcoin. I'm not sure whether it will happen or not, but it has got a very good probability with El Salvador's news, inflation on the rise, countries resisting now, IMF, World Bank, their reputation is gone. They have destroyed poor countries in the name of helping them. It's time US dollar needs to be dethroned. If you like the video, give me a like and subscribe. That's it for now.